Samantha LaDuc, founder of TradeOutLoud.com. Thank you so much for the invite, David and Anka, and I'm glad to be here. Happy summer. We are right in the middle of it, and finally feels good here in New England. I'm definitely interested in this topic of derivatives. I'm a professional options trader, and I use options very much in my process, but it's not all that I use to size up what's moving, why and how to trade it, but it's absolutely a key part of what I do, which is studying the options market, so the structure of the options market, big picture, as it relates to direction of the indices, as it also relates to a sector rotation in money rotation and stock picking. So I'm very much cross-asset. I study and track all asset classes, and then I basically distill it down into literally money flow to determine what's long, what's short, and particular asset classes that will outperform others. So that's all part of that stock picking, excitement and getting in there before it moves. So I'm the chief market timer at LaDuc Trading. It is my firm, but I actually have a full trading desk. So I have 3 products and a team of 10. I am not just doing this kind of market timing and letting clients know from a macro perspective, but also a micro perspective. So literally on a short duration to long time frames. I have basically a chase, swing, and trend focus. My major job, of course, is market timing, and I spot these kind of major macro trends early. And then I translate that kind of complex option and market structure into tradable rotation themes. But I'm actually running a live trading room. So I am with you as it relates to intraday scalps, as it relates to multi-day, multi-week, multi-month. So I'm literally sizing up whatever is of interest to clients, but also my own stock selection process. And I'm sharing that live with clients every single day. They also have a client Slack workspace where I post all of my analysis. Sometimes it's quite detailed, sometimes it's quite geeky, and sometimes it's just straightforward price action, buy here, sell there. Regardless, that's my focus, which is basically anticipating the move before it happens. And that kind of deems me a volatility trader, not because I trade VIX per se, but because I am absolutely looking for volatility to enter a particular stock or sector and then move that stock or sector. There's nothing worse than, being a trend or swing trader and money just goes to die because it doesn't go anywhere. It just sits there. There isn't a real definable high probability trade in getting in and staying in. That's very important to me. So I tend to use what's called time frame congruence. I work from a weekly time frame down to the daily, down to an hourly chart to kind of see which flow is the strongest. And I definitely use macro as a backdrop, but it is not the only thing that I'm studying. So I've formed a company by my, offering my own interpretation, and then I grew it so that I could offer products that would be also interesting to newer traders to help them, guide them, mentor them to safely chase. Because obviously that's been the thing, right, in the past few years, especially since COVID and folks work from home, and then that kind of transition to trade from home. Anyway, the point is that community product is very much focused on younger, newer traders that might need a little bit more guidance and also encouragement and risk management. I run so that's our Discord product, fabulous live trading room and analysts in there actively live trading everything that they do. I run the club product, which is very much kind of focused on the intermediate, and you'll probably get a feel for that in this presentation. I'm going to be more focused on the intermediate level active trader and investor. So they're more focused on durable themes and using options, oftentimes advanced options. It doesn't necessarily mean they have a huge book, but they're not new at this game. So they understand my language. They like the way I interpret the market. And so I very much focus on helping the intermediate community every single day. Again, live trading room. Edges are more kind of institutional and do-it-yourself hedge fund management. Craig Shapiro, a former client of mine for years, actually, he's also a hedge fund manager, runs that product for institutions that are looking for kind of a concierge service. So again, my framework is very much focused on the intermediate level trader and investor. They want to actively manage their wealth. They want to actively position. They might have full-time jobs. That's perfectly fine. But the point is that they're very much in this game of understanding the market. They love it. And they want to outperform the S&P. They don't want to throw it over the wall for a money manager. They also, of course, include those who are chasing, because I have a really good market read of where market, is going on any time frame. But the point is they're much more kind of in it for the long run. So that's why I say if you're new to trading and you're looking for an absolutely fabulous community of chase-focused momentum traders using both stock options and futures, then my Discord community product is perfect for you. I approach it a little bit differently, right? So typically, more beginner traders use technical analysis and basically just momentum, and that's really their thing. They learn patterns or they learn technical analysis because I don't really trust maybe their interpretation of macro. I actually have a specialty that's very different. I use technical and I use macro, but my specialty is intermarket analysis, and that's where I study and contrast and compare different assets and how they are outperforming one or the other so that I can find strength and weakness. Case in point, I'm very, very much focused on sector rotation. June 1st, I made a call, a strong one, literally pre-market for my clients, that I was stalking a value rotation, literally, that was the title of it. And I put together trades that would benefit for a rotation from growth into value. So that mega cap tech intensive rally that we had since the March bailout, and also from the January effect, would basically peter out and it would give a turn for value. So Caterpillar went from 150 to 260. That was an early call. And many, many, many other value plays that had been beaten down were now, it was now time for the Russell to pop up. So that was really exceptionally well timed because I was looking for that sector rotation. And then we basically basket fish, right? It's called basket fishing, where you kind of basket trade, basket fishing, however you want to do it. But it's basically where you have a theme and then you go and you find the ones that are going to move the fastest and you trade those with options, directional options, spreads. Again, it depends on your level of expertise in the options market. But that's what I do. I use the macro backdrop to kind of say, yeah, I think it's, inflation has been decelerating and typically small caps are outperforming when inflation is rolling over year. That's a macro argument. With my intermarket that says, you know what, small caps relative to SPY are at 2008 lows. So that's an outlier. That's an intermarket read. So I use my intermarket, I use my macro, and then I basically put it all together. I make a call like that sector rotation call, which is basically it's ready. We had junior tech outperform in May. We're going to have June be value rotation month, and we still have this thing called factor rotation. It's hedge fund factor rotation still in play from oversold short covering like Carvana or Tupperware yesterday, which literally I had just posted, it was at 80 cents and it went to 180. So it's the dash for trash move before we got this big week, which obviously is huge as it relates to earnings, because we've got Microsoft, we've got Google tonight after the market closes, and we've got Fed Day tomorrow. So when all of this backdrop kind of works, right, the market framework that I use, that we will have sector rotation beget sector rotation begets sector rotation, and then when that stops, we get volatility, and volatility reprices everything. So that's kind of how I work from intermarket, macro, obviously, this whole sector rotation theme, and then option structure comes in, and I look at the best performing plays. So I'll show you, for example, a coin, UPST. These were recommended to clients back in May and then June. And coin had already moved up to 70 bucks before I had recommended it. So it still had lots of room left, and it went to 110. So the point is, I look then and I see this concentration of option structure that's coming in with heavy call volumes. And I can track that, and I can see that it's building under the surface before the price moves. But I track option structure across interest rates, oil speculators, CTA, quant, gamma levels. Those are all kind of price insensitive buyers of institutional size. And of course, big money flow across assets, right? Bitcoin, equities, bonds. It doesn't really matter to me. I want to track the aggregate demand. And then I take the chart that I like, right? And then I'll go look specifically at what the option flow is doing. And that helps me with like a tool in my toolbox that gives me confidence that I have the wind at my back, basically. So that's a little bit of how I use option structure. And this whole, series is on, derivatives market. And it can get very complicated, but to kind of keep it simple, which I try to do, is I look for when we have this outsized momentum, and then it wanes. We kind of get this digestion. And then, of course, I can tell if there's selling coming in underneath the surface. We don't have it yet, by the way, but it's coming. And that's what I basically help clients do, is understand what I see and then help them position for these big, huge moves. And that's basically it. I have a then I move into the day-to-day momentum stocks and technical analysis, and then set up the best, what's called LRE, low risk entry. Give them stops, give them profit targets, and they push the buttons themselves. So, excuse me. So that's my market framework. Again, not just technical analysis, but much more. And it also serves to engage clients who might have very, very different time frames. So they might be really trend traders or swing traders, or maybe they are just scalpers. But we basically meet traders wherever they are in their trading journey, from beginner to advanced, again, from chase, swing, and trend. So I've contributed, and I'm a regular contributor, SiriusXM, Bloomberg, CNBC, you name it. This is Yahoo Finance. I just did a bit right before the Buffett annual meeting on why Buffett was in Japan. And, I like to make big, bold calls. And I really have no issue with that. So I do that on a macro basis, and then that kind of feeds down into my micro trade setups for clients. Volatility, is very important to a directional trader like me, but I want to just clarify, I'm not selling VIX. I happen to just recommend a VIX trade today, but that's because VIX is seasonally at its lowest in July, and it's been performing really, really well as it relates to holding a certain level. And then, of course, SPY is right up there to almost my max for the year, which I happen to have at 46.60. So it's time to come in and get a little bit more protection. And as you know, 2 weeks ago, we had a big surge of volatility, 21% one day. It was undone the next day. But the point is, or 2 days later, but the point is we have a backdrop now of moving into a kind of a volatility regime. So, but I use volatility as a way to time, like I said, energy coming into an asset or sector or stock. So for me, I evaluate volatility as something as more akin to, I work with it. I like it. I'm looking for it. I'm not afraid of it. So that's kind of my deal. It also works extremely well if I'm on a particular bent, like I was with GameStop a few years back, where the summer I had made this call that GameStop was going to go from 4 to 40. It was my 4 to 40 stock. And everybody knew that was my 4 to 40 stock. And then, well, guess what? Volatility started picking up, and it started picking up some more. And then it kind of started picking up a lot more. And we actually had this explosion, right, to 240 and then some. And that's where I actually said, whoa, 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 careful. We're going to have an options market that stops functioning. And sure enough, it did. But the point is, it made clients a lot of money, but that's where I had a very strong bent that once we got above that 40, it wasn't done. Volatility was really going to enter that particular play, and it did. So this is just an example. When we had that meme extravaganza, I actually was way ahead of the ball game as it relates to timing that from July prior. So I was very in tune with that particular instrument and the volatility that was coming into it and how the options market was breaking because of it. There is kind of a way that I approach the look and feel of the market that I thought might be of interest, which is these kind of low risk entries, right? That I'm trying to position in advance of the move. Again, volatility for me is not something to fear. It's something to absolutely use to leverage your very precious cash that you deploy into certain stocks, and you don't want it just sitting there or going against you. So I typically, on a daily basis, for clients in my live trading room, identify, sometimes it's just one. I have a theme and I kind of go and look for the volatility that comes into particular chases, what I call squeezes on a 15-minute chart. And they're extremely productive if I can also see options market that starts running very hard for that issue. So this morning it happened to be 3M. When we were having all the squeezes, it was Fubo and Coin and Carvana. But the point is, you can see the gamma starts chasing in these option markets start to get very excited and builds up that implied volatility, making those in this particular case calls outperform, right? So you have really a nice backdrop if you can identify on a shorter duration your highest probability chases, and there's typically market moving news that goes along with it. Yesterday it was the whole Chinese ADR set, and there was not just one, two, but three levels of Chinese stimulus announcements that came in all at the same morning. And so KWeb and Baba and JD and Baidu and all the usual suspects just exploded higher in a chase, and everyone started, jumping on board. So again, that was news dependent. China came in and, promised to help developers, and the White House is trying to make a deal. There, all kinds of news can also explode stocks and create that volatility, which is fabulous for your option as long as you're already in it. Sometimes trying to chase it is a little bit more difficult. You've got to really add, you got to zoom out. You can't go chasing on a tight duration unless you know exactly what you're doing. You need to kind of make that into a call spread position with later dated options. Anyway, for me, they are the best indication of money is starting to enter that product, right? And it's not just a one and done kind of thing. They typically can go on for weeks and weeks and weeks. So that's basically what I'm looking for. Daily tools that I'm using, of course, are, technical analysis and pattern recognition. I've got my fave indicators, like, they're counting cards. But for sure, money flow and unusual option activity, they just help to, again, like a tool in the toolbox, give me confidence that I am in the right stock at the right time, and it's getting more and more folks interested in that product. So options tactics, as far as I'm concerned, I use to leverage and also define risk. So if you're buying options, even if whether it's directional or a spread, then your risk is limited. And if you are selling options, and there are some ways to do that to finance your directional options, that can also be very beneficial if you know how to defend. And we'll talk about that a little bit later. But ultimately, you still have to know how to defend. Ultimately, here's the time frames that I use for my, and you have to define your own, by the way. So in any regard, whether it's stock or options, right? Futures, you've got a little bit of a defined stop loss, but for options, you don't really need to. You can use the tactic that you're in, like a spread, for example, set it and forget it. Or you really have to kind of like pick your time frame regardless, and then pick your option accordingly. For me, I defined a short time frame as a chase. Now, these chases typically last 1 to 3 days, and I use options 1 to 3 weeks out. So they're oftentimes based on an hourly chart, and I'll show you that. Swings for me, they typically are momentum trades that I expect not to sit there, but to have volatility enter and explode that stock price, right? And move that puppy. And they usually last 1 to 3 weeks. And it could, for me, again, everyone's different. I like employing options that are 1 to 3 months out. So obviously for chases, I'm using weeklies, liquid. For swings, I'm using monthlies. And then for trends, these are best, in my humble opinion, when I'm actually thinking this is going to last for 1 to 3 months. And it's usually, like commodities are getting bid, or, you basically have a theme and you're getting your best momentum players typically breaking out, and you roll out these directional calls or call spreads over time. So they last typically 1 to 3 months, using options 3 to 6 months out, and they're based on a weekly time frame. If I'm good at choosing, these will continue for many, many months. And I have a trend portfolio that has not done anything wrong. If it does something wrong, then obviously I have to remove that trend and I will happily replace it. But the point is, they're very, very productive and they keep working. Then I will just keep rolling out those calls or call spread, for example, because my trends, just so you know, are only long. My swings are long or short. My macro can be anything, and chases can be long or short. So hopefully that kind of a little bit. Okay, so can you see my, yeah, I'm right here. Okay, I'm going through kind of the education before I go through the charts. Make a sense? All right, so yes, I'll get to the charts. And definitely if you have any questions, hit me up in chat and I'll take a quick review before I get too far. But this is basically the presentation, and then I want to go over and show you what I see and answer any questions. All right, so this is my options framework, and here's what I recommend. You do you. Like, I did this years ago, maybe 10, and I still use it as a framework, but I know when I'm going to change it. Like, in other words, be prepared to accept the consequences at all times in your trading plan. But I have obviously an excitement for this market, and I keep my chase, swing, and trend timeframes generally as I just laid out to you, right, with the options, right, as I showed you right here. Okay, this is how I generally approach it. Of course, I'm going to mix that up from time to time, and it depends on how convicted I am. But this is basically, in a nutshell, the 2 hour, if I expect this chase is only going to last for a few hours, I can be sitting on this with some larger size, okay? If I'm not really going to be watching it very much, but I expect it's going to last for a few months, for example, then I'm going to have like 1.5 position size. If it's a little bit different, right, I'm like leaving it overnight, there's a lot of risk, especially weekend risk. Then you can see where I'm going to start out small, and then I'm going to add some position size. So this is duration, just to kind of give you an idea. And again, you have to come up with your interpretation of your framework that meets your experience level, your risk tolerance, all that jazz. This is mine. So this is if I have a conviction, and then I will take basically a set amount or a percentage of available equity. Typically, it's 1 to 3%. And I'm only going to take tight spreads. I'm only going to take and use an out of the money price target, for example, that I think is achievable within this time frame. So I'm not just going to say, okay, Baba's going to 150. No, Baba's going to 100, sure, but it's only 95 right now. So I'm not going to swing for the fences as it relates to out of the money calls. That's just not me. I don't think that your risk reward is very good. And I know that statistically, but I also know for myself. Strike prices, like I said, you can get, very, very, very crazy with this, but just answer one question to yourself. Is it achievable within the time frame, right? So I have a very distinct time frame that I'm kind of using as my guideline. Is whatever strike price, okay, that it's going to, in my humble opinion, when I place that option trade, is it achievable within that time frame? Really, really important. And then, for example, if I think BABA is going to go hit $100, realistically, when do I think that's going to happen? I might get lucky and it hits this week. I might not. How about August expiration? Maybe even September. The point is, it has to be realistic. And I think that's where a lot of the folks suffer terribly in choosing their strikes. All right. So again, market conditions also really, really matter. Right now, we're in the chop phase. There's no question. Tech is in distribution. We also have the risk of Google and Microsoft disappointing tonight. And what is that? Let's just hold on one second. Let me just, oh, that's not what I wanted. I want to get my market thoughts. So this is just what I post my market thoughts for clients, and I'm just trying to remember what the heck was the composition for Microsoft and Google, and here it is. All right, so here it is. So you got Microsoft and Google report Tuesday after hours, and they represent about 13 and 7% of the NASDAQ 100 respectively. That's a lot. Translation, they're going to move that market, whether they balance each other out or they both disappoint or they both gain. Regardless, the market reaction is going to be one that moves the cues. All right, and they also make up, by the way, 6.7 and 3.5% of the S&P. So you know that these two players can impact sentiment and market reaction. And right now, we have had a situation where better performing stocks have much higher earning hurdles than relative underperformers. Case in point, Tesla and Netflix. They reported and they both sold off aggressively, right? Even though the reports weren't that bad. We don't know what Microsoft and Google are going to do. But then you have a whole bunch of boring value plays in transportation, or even this morning in 3M, for example, or IP International Paper, which is again boring but essential. They absolutely had a very positive market reaction, and they spiked higher. So the point is, if you have an underperformer right now in stock price, you see a bid after earnings so far, and granted, only about 20% of the S&P has reported. And if you have a really, really big outperformer like the mega cap tech, they have been selling off after. By the way, this was when I referenced the K-Web contingencies. We're already in here. So I already recommended this a week before last, K-Web and BABA. So all we needed was some macro news to trigger that volatility in the K-Web or the Chinese ADRs. And that's exactly what we got yesterday. So anyway, the long story short is I'm really following a lot of the market structure to also see how bullish, right, this can last. Right now I've got an outsized, SPX 4600 target, but we've absolutely got VIX on the floor, and it should start to percolate higher. We have NASDAQ pushing up into some technical levels. This is the composite 14,500. That should start to get some resistance. We're deep in earnings season with a ginormous number of earnings reports this week. And then we've got, of course, economic data, which is substantial. FOMC on Wednesday. And I run a trading room every morning. And then on Fed Day, I run it also from 2 to 3. Then I also have from 4 to 5, my macro edge manager, Craig Shapiro, and I will have a public webinar where we have a Ask Us Anything format where you can come in from the public, and basically we do this once or twice a month where you can literally ask us anything about, the economic backdrop, macro trades, what's going on with Bank of Japan. Anyway, the point is we've got a lot of economic data this week that can absolutely cause the market to shimmy and shake. GDP, advanced retail inventories. Now here's some very strong unusual option activity started coming in this week from Macy's and Nordstrom and Gap. that was weird. I'm like, why? The charts don't look anything in particularly exceptional. But then I check economic reports this week and we've got advanced retail inventories. Maybe they've worked those burdens down, and this should give a little pop into that sector. Maybe growth rolls over after Microsoft and Google, and retail, which is a little bit of reflationary, gets a bid. Regardless, I am absolutely curious if this will produce the desired effect that obviously those option buyers think will happen by bidding up in option land, Macy's, Nordstrom, and Gap. Anyway, the point is we got a whole bunch of economic data that will impact markets. But for right now, this is kind of like how I look at it. If the market is in a directional move, which we've had very solidly since October, and then again, January effect, and then the bank bailout, right? Then it will continue higher. The market right now has not indicated it is ready for a sharp reversal because selling hasn't picked up, but they are hedging. So we can kind of see that through option structure as well. Anyway, the point is, this is how I work it out in regards to my options framework, what I'm willing to risk for sure on a stock or option basis. And you need to kind of create your own if you're new in that game. All right, so risk management to me, again, this is kind of the concepts, and then we can go over any, index, sector, or stock of interest to you. But this is my risk management. I try and lawyer every single trade. I try and take a look at the bull and bear case, right? So what's the bullish, momentum for moving higher? I have a very strong opinion about why recession was delayed. Higher wage inflation, basically wage demands, have triggered wage inflation, higher wages, which has triggered higher nominal wages, which has triggered higher demand and spending, which has triggered more inflation. Rate hikes are inflationary. So it's kind of a vicious cycle. The higher wage inflation moves, the more Fed hikes. Anyway, we're at a point where we've delayed recession. Next year, we're going to come into that whole argument of recession getting risk getting pulled forward, but that's not tradable right now, in my humble opinion. So Chase's, getting back into kind of that risk management, is Chase's not to exceed usually 20% of portfolio. I mean, some people just focus on Chase's. For me, that distracts from the goal of trying to figure out really where the market's going, when and how far. Swings, right, for me are my bread and butter. Okay, I don't care if it's index, ETF, stocks. I absolutely, or macro, I really like the swing time frame. And then trends are the highest probability. Like I have a phenomenal trend portfolio. I only get the strongest stocks in the strongest sectors that meet all of my criteria, and they're just gorgeous. So anyway, those are definitely my strengths. So I'm just kind of like highlighting that. And then once in a while, I will swing for the fence, but I do it safely. So let me explain what that means. Swinging for the fence is not ever going to be me putting 150, BABA calls when they're only $95. Not now, not ever. So what I do like doing, however, on a swing or a trend time frame is something called financed spreads, financed call spreads, financed put spreads, where you literally buy a call spread and you're selling puts against it to finance it. So you definitely have leverage involved, and you definitely can have some outsized results, right? But it also needs to be defended. So I'll give you an example. So first, finance spreads. You get it. This option tactic is really great, in my humble opinion. If you're going out 3 months, very effective. Archana, who's in my live trading room, moderator, and she's also a butterfly trader, and she'll also be having a presentation on this conference, I'm quite sure. She does it very differently. She does them shorter duration, but the point is, this is my comfort level. They're bullish. You can use them as either a bullish or bearish strategy, doesn't matter. And you're basically letting that financed spread work with decaying options. So you really have a great, in my opinion, opportunity to get higher rate of return if you manage it well. Still, you pick the right options. So all of that is very, very, very much what I focus on for clients. Case in point, most successful example ever. I will never repeat this, but it did work. I did it live. Archana did it too. So we both actually got rewarded, was Gilead. And I have this on my website. And yes, it was an outsized performer of size, even more than the GME. GME was only 125 times. This particular financed call spread was 250 times. It was crazy. Anyway, this is exactly what I recommend. You buy a call spread at the money. So you get one at the money, one out of the money, like $5 wide, for example, and then you sell an out of the money put or put spread to offset the cost of it, okay? And you want to make sure that that put spread does not break if you're directionally bullish. So your risk is losing the premium and owning the underlying stock if you're wrong, but you make sure that you defend and protect, and you can do that by following it closely and not just turning away and hoping it works out. That doesn't work. So this is definitely something that you can do on individual stocks, but you can also do it on bonds. So I've actually recommended this to, actually it was not, hold on, yeah, that one, to Bloomberg, which was basically a TLT financed put spread, and it worked out. Same thing. It was, I gave exact levels, where to buy, where to sell, how to defend on the whole concept that yields may be climbing, and TLT was definitely going to be weak, and it did. So this is another way where if you're interested in financed spreads, I just recommend that you really, really learn about margin, and then specifically don't swing for the fences. Get something that you can defend and that is reasonably going to get there. Oh God, so many times. Yeah. So many times. It's so okay. I got to comment. So many rules. Not really. Not for me. You got to do yours. Keep it simple. That's all you. But for me, this is definitely the 3 time frames and the framework of which options I choose, etc. All right. So in regards to hold on. What is your question on the small? Yeah. So hold on. Where is this? Looking for something in particular. Yes, this was a stocking value rotation. Hold on, ENVX coin. I got all this stuff. Where did oh, it's in page 2. Sorry, Mikey's in my my live trading room, so I'm trying to get this. Here it is. Okay, so this was an example, right? So June 1st, my market thoughts. Also June 1st under swing ideas. So it was very, very, very focused. You're asking about small caps. Value, June 1st, value is oversold, stocking a value rotation. And then this is when I was talking about Russell relative to SPY, right? It's now back at 2008 levels. Definitely extremely, this is here. So I posted, this is an intermarket. This is how I start intermarket, small caps to SPX on a monthly. This is 2008 levels, way oversold. That was June 1st. Literally, I took this the night before and I presented this to clients the next morning. You know what's happened since, right? So we had a phenomenal repeat. Hold on. We had this, right? This is small caps. And this is literally, that's June. Sorry, I'm on the wrong. Here's June 1st, right here. So here's June 1st, and that was literally my small cap recommendation. Okay. So we've done a really, really great job. That's my idea of a perfect swing timing play. And you can go in originally, right? Just try to get some directional. You can add some puts, you can add some call spreads, you can, roll it. But the point is, this is timing a sector rotation. And the one that I was actually most excited about, believe it or not, was IWV. So this is actually the one that I had recommended as well. So June 1st, why? Because IWV is Russell 3000. And there were so many that looked like they were going to absolutely come up off the grave as it related to short covering, right? So it doesn't really, like Carvana, right, was a huge mover within the Russell 3000. I could go on and on and on, you know, Rivian, also look at that gorgeous gap up. It doesn't, Caterpillar was small caps, and that's exactly the one that I did recommend June 1st, and that moved higher all the way up to this, you know, 260, and now it's pushing 266. The point is, all of that was predicated on, believe it or not just this intermarket, but also backdrop, right? We have signs of a turn in options activity. DVY is actually dividends, and they normally have no contracts, and all of a sudden they were getting thousands of contracts to come in. And it just looked very much like we were going to get reflation trades coming in. I had an SPX roadmap. I talked about that, but stuff just looked like it was time to come back down in mega cap concentration risk and get a bid in small caps. And it has worked extremely well. So one of the things that I do is I follow NYSE, and I can kind of show you what that looks like even today. So here's NYSE composite. This is McClellan's summation, but it kind of gives you the same idea. Here's that June 1st call, and we are still overbought, still moving very strongly. Here's a growth to value rotation, which is something I use as part of my intermarket. And also the fact, right, that we have just this, this grinding higher backdrop, but mega cap concentration risk. And we sure enough have started to roll over since June from growth to value, with value absolutely catching up. It's been really a beautiful trade. The dollar's not really been in the way. The 10-year above 3.9% gives us an absolute backdrop for volatility. But for the most part, we really have not had much in the way of selling yet. We just had that one day. But, you know, here's 3M this morning, right? These underperformers in stock have had an outsized reaction in their earnings report. Example, you can also see how the earnings in 3M this morning, I go to the option chain and I can show you massive calls coming in. They're chasing. This thing went all the way up to almost a 200-day, which is that green little figure, almost to 111. The point is, I'm looking at this, right? Pre-market, market opens. I can see this gorgeous value rotation in full view, but I can also see all of a sudden the market has decided they're interested in 3M and they just start hitting it hard and positioning. This is August, this is September, not just chasing. Anyway, the point is, options are definitely what I consider a tool for supporting that directional call. Same thing, UPST has been a call since it literally got above, it's been amazing. Right above this 200, it literally was this day, right here on May 17th, recommended UPST. It was part of my junior tech rotation. Options were, you know, not very interested at the time, and then they have grown and grown and grown, where you've got tens of thousands of contracts per strike, and they're chasing this. It's also one of the top 10 shorted stocks on IBKR. Coin was another one. Coin, which by the way, I didn't even recommend until here, like on Monday, or was it Friday? 29th. So on the 29th, literally, it was this or this one. I can't remember which one. I'll have to grab it. Anyway, one of these days, it was $70. Okay. It was $70, and the options flow was pretty okay. It looked pretty solid. It had already come up off the ground strongly, and I missed most of it, but I really liked the option flow. And so I started, that was weird. I started posting, sorry, that's a client. I'm getting a little nod. I started getting lots of option flow, and I started recommending it even more and more and more, and this thing just shot up to 110. Long story short, we've had a phenomenal move higher on Bitcoin proxies, on short covering proxies, and a lot of these were led and confirmed with the option flow. So that's basically how I've played that game. Okay, so this is basically where we're at now. Let me just kind of get into this. Where the heck is that? There you go. That most of the chases are very, very, very specific. The swings and the trends are much more durable. The financed call spreads are what you call very, very selective as it relates to highest probability swing or trend trades or macro trades. I mean, if I'm willing enough to go and put it on Bloomberg, then I have to be pretty darn confident about it. I have very, very much some tools that I use. Let me just show you another tool that I really like on the option landscape. By the way, I'm a power user of Spot Gamma. I also like trading volatility, but Spot Gamma lets my whole team in to see their gamma levels and their expected 1 day and 5 day expected moves, which I have found to be extremely helpful. And then I layer that over with the option activity. For anyone who's looking for kind of a free tool, there are a number of them, by the way, but let me just show you this, for example. I'm going to show you Coin Me versus Michael updating it. Okay, that's also Coin. Here's Coin. That's too far. All right, then we definitely have, let me just kind of show you. All right, so Coin was my horse, basically, and I really, really liked it. Recommended when 70. It basically moved all the way up to my price target of 86, then 92, then 110. And here's some of the option flow that supported it. Okay, so Coinbase at the time, right at the money, it was about $71. It was just below that, and it looked very, very, very strong as it related to July 21 expiration, coming into 86 bucks. By the way, it did hit there. This was on 630. Okay. And then I kept following it up, and I'm like, you know what? Dang it. Now we're at $80. And not only we're getting to 86, but I think we're going to overshoot to 90. Right. And then we get up to 90, and we're getting up to 81 now. And I'm like, oh my God, look at the calls coming in of size for 90. So I kept doing this and showing this with clients to kind of, oh my God, wait a minute. We're now at 90. Keep rolling up. I still see lots at 100. Do you see the point? I really, really get excited. It's been amazing. Be smart. We potentially definitely can hit this 116, 118, maybe even up to 130 by the end of the summer, but definitely be smart. So I update clients on the option flow as well as the ones that, are new. So lately, the stuff that I have is kind of boring. It's like Comcast, right? So I think the junior tech has really exploded enough. Mega cap tech concentration is at risk. Value is certainly in play, but it is now extended. The dash for trash, it definitely percolates up from time to time, but it's not what you'd call, easy to position for. The earnings reactions like 3M or Spotify to the downside, but this is like IP, for example, toilet paper. Yay, very, very, very strong earnings reaction. And their bottom fishing plays. But for the most part, the tech space hasn't really been that exciting, if truth be told, since the May extravaganza. So this was an update on July 18th. And then literally on July 19th, I wrote to clients, don't be a piggy. We're way, way extended on some of these swings that have worked, but they are absolutely, in my humble opinion, going to come into distribution. So that's my advice right now, is to expect a little volatility in August, September. Could we roll down into 4,000? Potentially. But for right now, we have not even rolled and broken 4,500. So it's, one step at a time. But there are some options that are coming in that are getting more sold up at the higher levels, which tells me that's a level of resistance, not for nothing. But when we typically have a whole bunch of upside calls of size getting sold, it will go and hit that and then reverse strongly. And right now I see that level in the 4,600 area. So it would not surprise me if we go up and tag that 4,600 before a sharp reversal down for the rest of the summer. All right, so you got my view of what I look for in regards to options. It follows, it does not lead, and you have a very, hopefully, a good view of how I use options based on the time frame. I've got, what do you want? Yeah, I've got very much the time frame of this summer for digestion, summer chop. Definitely. August is typically where folks kind of grind away their profits, and no trader has, ever said my best trades were, my best winning trades were in August. It's typically the opposite. So I would say pace yourself for the rest of the summer, and then we'll see what happens in September. FOMC, probably they do their mandatory hike. It would be a big surprise if they did pause, although I think they should. I do think that they will say they will skip September. So on a macro time frame, and yes, we're going to have a free macro to micro webinar if you're interested in that. If you're just interested in very simple technical analysis, no harm, no foul, then check out our Discord product. It's a 7-day free trial. It's phenomenal traders in there and mentors. My club offering is obviously more sophisticated. If that is of interest to you, you will get all of my portfolios, chase, swing, and trend. And I have 3 trading room, live trading room moderators, including, by the way, a custom trade support channel in Slack. So you go in there and you say, okay, I want to play this for earnings. How do I do it safely? Or Samantha said she really likes Comcast, but it's slow. What's a really great, option tactic I can use over the next few months, right? A Comcast or, any of these other, like IPI has been one that I've been excited about since June 1st. The point is, if you're looking for that kind of more hand-holding, or at least active support on any trade that you have interest in, you reach out to us. Like, that's what we're here for. That's why I have a team of 10. Okay. Any questions, feel free to hit me up. And you can also see that this is, did I hit this? Yeah. This is definitely website. Luckily, it's going to get done in the next month. And so you'll see all the contributors up there. This one is really old, but it is LaDucTrading.com. We have a YouTube channel, and myself and Craig and Riley and Rithika, we all put out our in educational videos. I do one daily. Actually, I should say Michael, my trading room moderator, grabs something from the day and posts that. Rithika puts her 3 top trades that she's actively in at the beginning of the week on Sunday. Riley does one every single day because he runs the Discord product live trading room for 6 hours. I do mine for 2 hours even every morning. So we have a lot of free educational videos and market timing calls on the YouTube site. And basically, this is where we're trying to meet every trader where they are at. And remember, this is not a game of perfect. 100% not a game of perfect. Most definitely have had some really great months. And right now, I think we're going to get into a dangerous time. End of July and into August. So trade safely, know your time frame, try not to swing too far for the fence, right? And if you do, take your loss quick, and don't risk anything more than you're willing to lose, I think is the biggest advice I give in life or in this game of trading. And it really is not a game of perfect. So options are a way for you to kind of define risk. If you have interest in learning more, like I said, I'm not shy in helping you if you're a client. And if you want to follow on Twitter, I can be reached at Samantha LaDuc. Right here, we've got lots and lots of action this week with earnings and Fed and other central banks and economic data. This is something that I interpret for trading, and Craig for clients who are obviously with managing money. So Craig is the macro advisor edge manager, right? So they're really actively managing money, and this is the other level if you're interested. But for the most part, if you're definitely just into chasing whatever moves, right? And you just want to do it safely, fabulous community, LaDuc Trading Discord. I highly recommend it. And if you want something more sophisticated, club, that's me. All right.